Hello, fellow traders. This is Tina G, FXKISS. Today is a Sunday, March 3rd, so my mood is a little bit of a Sunday mood. But instead of making pictures, I wanted to make a video of why did I take Euro Pound trades. Um, so based on candlestick formation, support and resistance levels, and the wave movement. Trend lines as well, but most important, and the highs and lows, the way the market is waving, and then if it starts to form lower highs than the past high, yeah, that's also one of the signs. But so the reason why I saw a trade opportunity on pound or euro pound is because market, I think it was sometime here that I spotted that it was sometime, was this is December, so yeah, in this area. So market has already trended up. If we apply the template that we have, so market has already started to wave up, trended up, and then changed its direction and pulled back in a form of rally. The trend has changed because of the wave movement. If anyone is wondering why, because of Fibonacci wave movement, we're now in a down AB on a monthly chart, and because of that, I am more oriented towards the downtrend, towards the down direction than up direction. Market whole. So if you see here, as I mentioned earlier, candlestick formation. This is bearish engulfing. Even though market formed a higher high than the past high, it strongly pulled back and formed bearish engulfing, and then consolidated for, this is tweeze the tops, consolidated for months and months. Keep in mind this is monthly trade, so I'm treating it as if it was daily chart. So yeah, consolidated, and then last month, actually in January, after January closed, it formed a bearish engulfing again, and that was lower than the past one. So I started to pay attention to the entries in the next month, which is February. And I have taken some trades in February on the euro pound. I didn't let them run, so my profits were less pips than what they could be, which is visible from my past published trades. I don't know what they were. I think they were like 60, 70, 80 pips, and then I could let them run for 100 up to 150 pips. I don't know. Can't remember anymore. But I do know that this is where I was entering in. So after this candlestick formation, I was entering in this area. And if I entered up here, just hypothetically, this would have been 260 pips of profit by now. Anyway, month is 30 days long. There's less than, I think there's around 20 days of working days. So a lot of patience required for this. If we take it down to, no, we don't need to. Yeah, actually we do need to take it down to monthly. No, not monthly, weekly. Yeah. So you see here, I was paying attention to. No, I wasn't. I was somewhere here trading downwards, and then the market pulled back, and I was waiting for I was waiting for market to form another bearish formation, and over here we have tweezer tops that were ideal weekly. This is weekly candle, were ideal signal for a downtrend, and the market did drop down again, pull back, and the good thing that what I am happy about is this is the fact that it's kind of breaking out of a consolidation. So if I treat this as a consolidation, actually this would be one, excuse me, yeah, I think this would be the second one, somewhat. No. So we have finally, hopefully, the market turn around. Oh, let me see. Let me edit this. There we go. Something like this. Oh well. So market pull back, drop to the support level, bounced off the support level. This is resistance level, and then found resistance and turned lower. So last week it fell out of the consolidation. This is a breaking out candle. Lower is definitely lower than any of the past lows, which would only be this one. Only this one would count. It bears took out the past low, first past low, and now if this market is designated to drop further, its next target will be at 0.8305. And my target is at future support level, which is very low. In the meanwhile, market has another obstacle. I like to say an obstacle where it may find support on it and only then retrace back and find resistance at this level, 8320, and then continue going downwards. Of course, it's not just gonna go down in a straight line, but as the market tends to do, it waves. If it does go in a straight line, consider it as a Christmas wish, because that's what it is. And that's that. Yeah, so that's why I am focused on it. That's why I'm a bear trader, or selling short. No, it's not trading short. Trading short because I'm trading off of a larger time frame, which is monthly, being a bearish, giving me a bearish signal. And because it is monthly, I do keep in mind that it's gonna take a longer time for something to achieve. But that's how I like to play. So I'll play that. And that is that. Thank you for listening. If you have any questions, if you're even listening to my video, and if you're interested in Forex, feel free to ask questions, ask below, and ask anything you want, and talk to you later. I hope you have a beautiful evening, weekend, Sunday. Enjoy and have a successful week and months ahead. All right. See you later. Bye. One more thing, what I forgot to say, what I forgot to mention, is maybe show into more detail of how it's like. So we were on a weekly. weekly, yeah, and this is daily. And this is how daily looks like. So, market rally to the resistance, bounce back, rally down to support level, bounce back. Obviously, we could enlarge this. Enlarge this by something like this. And the market broke through, dropped and pulled back, and now it's bouncing off of a new resistance level, which is at 86.18.19. And well, let's anticipate another drop, which will be wonderful. That's on daily. So how does that look on maybe hourly? Let's say 4 hours. That is phenomenal. 4 hours. I like the formation of this. However, I do anticipate that the market is going to fill in the gap, and then maybe then start to drop again. If it just continues to drop, it will have to be something that will really drive it down. So we'll see. That's 4 hours. 1 hour. Right, 1 hour. It is being faced on a smaller time frame. It's being faced with the future support level. So we'll see how that holds, and if it holds. If it doesn't, good. Breaks through the counter uptrend line and finds resistance on the backside of it, and then continues to fall. Fantastic. So we'll see. All right. See you later.